why is it that no strategy works for you? Have you ever thought that to yourself? That you've tried countless strategies. You've watched countless YouTube videos from so-called gurus showing you a strategy that is proven profitable. And yet, for some reason, when you try and take that exact same strategy and apply it to the markets, you don't seem to get results. And typically what your cycle probably looks like is you start with YouTube, and your goal is to find a strategy that works because you think the answer to all of your problems lies in a profitable strategy. And that thinking isn't flawed inherently, but there are some cracks that need to be fixed for that to actually work. You find a plethora of trading strategies that are supposed to work. And so you watch a strategy, and in that video, the mentor breaks down that strategy in insane detail, so much detail, and you feel incredible as you're watching that video. You feel like you've just got the holy grail. That sounds familiar to you. I've also been in those situations in my life cycle as a trader. So you watch the video and everything clicks. He shows you a plan, he shows you some trade examples, and you think, that's it, I've got it. Now, the next thing that you do is probably the main reason why this doesn't work for you. Because from here, when you've watched YouTube and you went to find a strategy and now you feel like you have the strategy, you make one fatal error. And that is that you go straight to the markets and you try to live trade that system. And that's the biggest problem. You don't know the data. You've seen a couple of cherry-picked trade scenarios from a mentor that makes this look like an incredible strategy, this 80% win rate strategy that was tested over a 3-day period, over a 5-day period. And what's very likely to happen to you in this process is that you go to the markets, you think you understand that strategy, maybe you don't actually even fully understand it. Maybe you know some details. Maybe that you get there when you've taken a trade, you even have questions. Should I take this trade? Does that make sense? Is that what he was referring to? There's already an element of doubt there, but you blindly follow anyway. And you take a trade. And maybe, if you're lucky, your first trade is a winner. Maybe you win your first trade and you feel incredible. You feel on top of the world. You feel like you've solved your problem. Now you're going to get the results. Now this time is different from the last 5 times that you've tried this, until the inevitable happens. What will happen is you will go on some type of losing streak. You'll take a trade and you'll lose the trade. And then maybe you lose another trade. And maybe you lose another trade. And by the time you've lost 3 trades in a row, that seed of doubt that was once in your mind as to whether this is actually going to work is now sprouting into a full-blown forest of self-doubt and confusion. Now, this is where things get messy, and this is where you're likely repeating the same mistake over and over again. So for now, you've gone to YouTube, you've tried to find a trading strategy. You found one, a trader that promises you an 80% win rate, 10K a month, how to become profitable in 2026, the only strategy that works this year, and you fell for the trap. You fell for the bait, and now you're paying for your faith. And what do? You go and repeat it again. Your first thought is that the strategy is the problem. So you go, you get a YouTube strategy, then you try it, then it fails, or at least in your head, you think it fails. And so what do? You go again in search for another YouTube strategy, because again, you think that that's the problem. If that sounds like you, and you're watching this video now because it's literally called Why No Strategy Works for You, I'll tell you why that actually is. It's a lot less to do with the actual strategy than you think it is. You could give me any one of these strategies that you're finding today on YouTube, and the likelihood is there is some level of profitability in that strategy, for sure. I mean, I am someone who consistently posts my strategies on YouTube with a track record, with trade examples, with trading plans. So I know then, through my experience as someone who posts them, I know that there are many out there that actually work. So the thing is YouTube is full of winning strategies. Of course, there's a lot of rubbish out there, but the reality is there are probably many golden strategies that are given on YouTube. If there are many winning strategies on YouTube, but none of them work for you,
then you can't blame the strategy because it's just inherently wrong. It's inherently flawed. The logic doesn't make any sense. It cannot make sense.
if YouTube is full of winning strategies and they don't work for you, then maybe you're the problem. And I know that's hard to hear, and it was especially hard for me to hear, because how could I be the problem?
How is it me? It's just the strategy. It's either the strategy works or the strategy doesn't.
But there's a few things that you're getting wrong in your mindset, and I'm gonna cover some of those things now. The first one is this big concept of data batches.
You see,
The first fatal mistake that you're making, as I explained previously, is you're watching a trading strategy and you're immediately going and testing it in the live market. So you have nothing other than someone's word that this thing works. And again, like I said, maybe it does work. I could take pretty much most of the trading strategies from YouTube and turn them into winning systems that I can actually make money of. Now, is that because of the strategy? Partly, yes.
but if we can both take the same strategy and I can be successfully profitable with it over a long run and you can't, then it's not just the strategy. The strategy is important, but anyone could build a strategy. The key is, do you have the data to support your strategy? And then
Do you have the psychology to follow through with that strategy even in difficult periods? And the answer for most of you is no. This is why you strategy hop. And this is the biggest mistake. So what you need to do before you even think about trading live is you need to validate the system.
step one is, yes, find a winning strategy.
Of course, you need a strategy, but as we've discussed, just because you have a winning strategy doesn't mean that it will be winning for you.
Step two, though, something that 95%, 98% of you that are watching this video probably don't know how to do is validate the strategy. You think that the strategy is valid because somebody showed it you.
You think the strategy is valid because you took a trade.
And you won. But the moment you go on a losing streak, you think the strategy is invalid. Now, newsflash, I'm here to tell you that every trading strategy
Has drawdown periods. Every trading strategy loses money at some point. There is no
perfect strategy. There is no 100% win rate. Even 80% win rate trading strategies go through drawdown periods because the risk to reward is unsustainable. You need to validate the strategy. And only in the process of validating the strategy will you truly understand, do you have something that works? Because the flip side of this is, maybe you do have a strategy problem. Maybe the strategy is broken. And then in that case, fair enough, go and try something else. But until you know for sure the strategy doesn't work, then you're just guessing, you're gambling. You're nothing better than a gambler, which is what you have been for so long, which is why you're still not getting results.
And so your goal then is to transition from someone who gambles in the market and calls themselves a trader to someone who actually is a trader. And that's validating your system. And so how do you do that? Here's how you validate a system. So validation comes from a few different points. The first one is rule-based consistency. That means if you break a strategy down to its fundamental level, it will tell you a few things. Number one, time. What time does this strategy work? Is this a New York opening strategy? Is this a London session strategy? Is this a strategy that works in the Asian session? What you can't do is find a strategy and trade it at
any random hour of the day and then allow that to define the profitability. Because the truth is, you're not going to be
trading 24 hours in a day. So the first thing is you need to define your time. Number two is bias. You need a bias, which is part of the strategy. Something that tells you whether we're expecting price to go higher, whether we're expecting price to go lower, or maybe even whether we're expecting price to stay in a range and you have a mean reversion trading strategy. Time, bias. Number three is location. Because you see, just because you have the right time and the right bias, that's not enough alone. Now you need location. You need to know, we're trading short today, but where are we trading short from? Let's take a theoretical example, right? Let's say your bias is bearish. And so your bias coming into the session is lower prices. Here we have, let's say, some type of swing low. Again, location. Are you someone who sells the breakout? Are you someone who sells midway into the trading range before we go? Are you someone who sells on the retest of the breakout? Are you someone who waits for a full-fledged pullback to trade lower from the breakout.
Now, these are just 4 different examples of location. There could be more.
And so just because you have the time and the bias, you need location. Because if you just trade at every single random location, no matter how good your bias is,
You might be 70% accurate on bias, meaning that you come into the market that day and you say, I think price is going to trade lower. And price does trade lower in that session. That does not mean that you will make any money. In fact, just because you're right means nothing. You could lose and still be right, because that's the game of trading. Trading isn't about
predicting price. It's not about making money. It's about finding a strategy that actually works for you. So once you have time, bias, and location, now you're making real progress. And again, this is just the first step of validation. This is rule-based consistency. So we have time, bias, location. Number 4, we need targets.
You need actual levels that you're expecting price to go towards.
Let's take the same example, right? Let's say price is bearish. And let's say this is your target, but the New York session opens at your target. Now your time is on point, your bias is on point, right? Maybe you have a location, but there's no target. Maybe the target is already been hit.
And so that invalidates your trade.
So you need time, bias, location, and targets. And then what we also need is confirmation.
We need confirmation
That all of these first 4
are actually going to work. So again,
another logical example of that is, let's say we're in a bearish trend like this. Time, let's say it's 9:30. So we have our time.
bias.
We're bearish. So we have our bias. Location, let's say we have some area of interest up here.
So now we have location.
And then when price comes back, now we have targets because we have the lows down here that we're going to take out. So now we have time,
Bias.
location, and targets.
Now we need confirmation.
Because we don't want to just sell here and be risky. We need to see price come into this level and give us something that indicates that these first things are correct.
There are many times that I come into price
And my bias is bearish,
and maybe price trades bullish for that day.
but I don't just start taking random sell positions without confirmation.
Otherwise, I'll just lose money.
So I wait for confirmation. And that is the 5 elements.
That you need even just to have a strategy. So if you're someone right now who's watched a YouTube video or you're trying to trade a trading strategy that isn't working, ask yourself, do you have these definitions? Do you have the time in which the strategy works? Do you have how you define your bias, the location, the targets, and the confirmation?
Yes or no? If no, then that's a huge problem. And if yes, well, maybe there's even a bigger problem with this, because that was only one. The second is definition. I can almost guarantee that if you're watching this right now, you don't have rule-based definitions. So what do I mean by that? Number 1, time. Is your time defined? 9:30 till 11, 7 till 10, 2 till 5. Is your time confirmed? And that's the easiest one. Maybe you do have that one. Number 2, bias. Okay,
I see so many people get this wrong all the time.
and their bias ends up being random every single day. So how do you define a bias? Maybe you say market structure, maybe you say support and resistance, but are those rules consistent? For example, I can have a market structure bias. Maybe it looks simple like this, and it's market structure. You have a high, you have a low, and now you're expecting a lower low. Fine. What about a scenario that looks like this? And today, again, which is your structure? Now, are you bullish today, but yesterday or last week you used these swing points? And so why I'm asking this is because I suffered from this immensely. I am someone who uses market structure as my definition for a bias. But the problem that I was running into as someone who traded market structure is one day I would use the 1 hour time frame because it looked cleaner. The next day I would use the 15-minute time frame because it looked nicer. Maybe some days I would use the swings because they looked clean. Other days I would maybe use the internal points because they looked cleaner. So if you don't have clear, defined rules for what actually makes a high and makes a low, what high should you listen to, what low you should listen to, if you don't have clear rules for that, you are again just gambling because there's no definition. It can't be rule-based because it's random every single time. And so for me personally, what I did is I went on a long process of studying and collecting and testing different ideas and different things for what actually makes a high, a low, What's actually a break of structure? What structure do I actually use to determine my direction for the day? I had to go and put those into very specific, clear, and repeatable rules. Because if it's not repeatable, if it's not specific, then you just have random stuff. If your strategy is just find a key level, well, what's a key level? Is it a whole number? Is it an area of resistance? Okay, if it's an area of resistance, then what makes it an area of resistance? Is it 2 taps and a rejection? Is it 3 taps and a rejection? Is it 5 taps and a rejection? Is it spending 1 hour in that area? The same thing for support, right? If it's a trend line, what makes a trend line? Is it 3 touches? Is it 2 touches? Think about the concepts that you use and then think about what makes them valid. So for me, for example, in my core strategy, which I broke down quite a lot on YouTube, is I use market structure for bias. I use session liquidity, order blocks, and fair value gaps. Again, and that's just vague. What makes something an order block? I have very clear defined rules for what is or isn't an order block. I have very clear defined rules for what is or isn't a fair value gap. I have very clear and defined rules for what time frame I need to see this on. Again, this isn't just random, like I'm just gonna use order blocks. You'll get lost. I'm just gonna use fair value gaps, you'll get lost. So market structure, session liquidity, order blocks, fair value gaps, that gives me my location. For my targets, I have very clear and defined liquidity that I use. Now, this isn't just some subjective trend line that I see on the 1 hour time frame or some subjective random equal highs that I see on the 5-minute time frame. No, these are the same levels of liquidity with the same definitions every single day. Because if you don't have that, you are just going to get overwhelmed and confused. So I have very clear and specific rules for what is the liquidity that I'm using, and that's my targets. And again, same for confirmation. Every single time I use the same confirmation model. It doesn't change. It's not one day I see a wick above a high and then a close back inside the range. And then the next day I see a lower time frame change of character. And the next day I see a lower time frame fractal shift. And the next day I see a bearish fair value gap close inside of the price leg. They don't change every single day. It's the same confirmation system every single time, because that's the only way that you can ever truly build a strategy that works and validate it. Because you can only validate something if it has consistency. If you want to be a consistent trader, but everything about your trading is inconsistent, well, what sense does that make? It doesn't make any, right? So you need to clearly have concepts you use and definition that you have. And then when you've clearly defined them, clearly have the concepts and you've put them into a plan.
I trade this time.
This is how I define my bias. I look for trades from this specific levels in this trend. I use this for my targets. This is my confirmation. Then I take the trade. I put my stop loss here every time. My take profit here. I go break even at this time. Only then can you even validate a system, because now what you do is you take this and you go and run an extensive backtest. Go a year back, go 2 years back, go 3 years back on whatever asset it is that you're trading, and then trade it as though you would trade it live every single day following this trading plan. So all you do is you trade this trading plan on historical data, and every trade that shows up that follows your plan, you take it. If it shows up, 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 you take it. And after a year minimum of price action, minimum a year, or a minimum of 100 executions, then you can look at your data, you can look at your results, and you can decide, do I have a strategy that works? Is it profitable over 100 trades? Is it profitable over 1 year of price action? Only then could you have something that even could work. And so you want to make sure that you have that strategy with consistent rules, and then you actually validate the strategy.
Because what you will find out your win rate. How many trades out of the 100 executions did you win? Maybe you won 40% of your trades. What you will find out is your average risk to reward. So let's say you had a $100,000 account and you was risking 1%, which is $1,000.
For every $1,000 loss that you took, what was the R multiple that you made? Maybe it was $4,000. So now you know that every trade that you lost 1,000. Every trade you won, you made 4,000. You took 100 trades, you won 40%. So you won 40, which means you lost 60. So you lost 60 times 1,000, so you lost 60,000. Now pause for a second, this is important.
Over 100 trades, you know that on any given day or given week or given month, In total, you lost $60,000. But right now, you lose a couple of trades and you can't handle it. You lose a couple of trades and you freak out and you say that the strategy doesn't work. The reason you go through that, which I totally get it, is because you haven't experienced what losing looks like. You haven't normalized the idea of losing because you come on YouTube and all you see is winning trades. You look at people that turn $1,000 to $1 million and they never lose a trade. And so your expectations have been fried.
Your brain has been fried to believe that if a strategy loses trades, it loses money, and it's a bad strategy.
It's completely and utterly wrong. Every strategy goes through drawdown periods. It's not a case of winning. It's a case of, do I make more money than I lose over 100 executions?
That's all you have to think of. That's all the equation is. You're just solving that math problem. And if you solve that math problem, then you're on your way. So you lose 60 trades and you gain 40. And again, many of you probably have the misconception that if I lose 60 trades and I win 40, then that's wrong, that's bad. And not necessarily. It's just a math equation. If I win 40 trades and I make 4,000 on each of those trades, then I will make a total of 160,000 on those 40 trades. 40 times 4,000, 160,000. So now what you do is you gained 160,000 and you lost 60,000 and you're left with $100,000 of profit. That is a strategy that works. Here's the catch though. There is something in trading which we traders and anyone who understands math and probabilities knows is a concept called randomized distribution. Okay, so this is the next session of this class. This is basically the next chapter, and it's different to the technical trading stuff that we've covered. So just before we go on to randomized distribution, we start talking about psychology and data. If you are someone right now who that makes sense to you, everything that I've just gone through, it clicks. Something in your head has clicked, and now you understand maybe why the 5 strategies that you've tried haven't worked, or you've blown multiple accounts and you win some trades and you lose some trades, and then you hop onto the next strategy. Maybe now that makes sense to you. Maybe you're someone who's sitting there thinking, okay, all of that makes sense, but how do I do it? How do I define all of my rules? How do I quantify them? And here's the truth of it. You do it through hard work. You do it through long hours of testing.
That's what I had to go through. I can't even tell you how many hours I've
spent testing all of my rules, all of my data and everything. It's real work. This isn't no
side hustle. This isn't no 4-hour work week.
This is real work. However, I am happy to tell you that in me doing all of this, I already have the data. I already have the rules, I have the models, I have the system. Unlike all the other videos you've seen on strategies that work, that don't give you all of the rules, all of the systems, all of the data, they just give you
ideas and a few cherry-picked examples.
I have all the data and I'm not afraid to share it with you, and I'm not afraid to give it you. In fact, what I've done for myself personally to make my trading 10 times better, 10 times easier, and 10 times faster is I took all of my rules
for market structure,
for order blocks, for liquidity, for targets, my trading plan, and my rules for how I analyze price. I have condensed them into rules and input them into an indicator. So I have an indicator that I use for myself that I'm now offering out to the public, and it's called my SMC engine. And what it does is it defines bias using a repeatable model. Now, notice, I implore you, maybe you've already tried, go to TradingView, search indicators and search for market structure. Please, please, please let me tell you, you will find 1,000 indicators that will show you market structure. And I've looked at almost all of them because I wanted to just use someone else's that made sense. None of them made sense. I had to go out and build my own based on my rules that I know work. So I'm telling you, you can go look for them, but you won't find any consistency. The rules won't make sense. My indicator, because I'm using it for myself, so it has to be what I need it to be. It uses my specific rules, my specific logic. It's the same every single time. It gives me all of my key order blocks. It gives me my key fair value gaps, and it gives me my key liquidity levels. And it also gives me my bias for the day based off of market structure. So in a click of a button, my chart gets loaded with everything that I need to see that I before would have had to manually do.
Now, this isn't some magic sauce that's going to make you profitable, but it is the entire automated process of how I analyze the chart.
And because it's not just a done for you, gives you profitability,
what I also have done
is paired it with my actual strategy.
So not only am I giving you the SMC engine, but I'm going to give you my actual strategy.
And inside of this strategy, I'm gonna give you, I think there's around 30 hours.
Maybe more. I think there's more. There's around 30 to 50 hours of back testing, which is me just taking trade after trade after trade after trade, hundreds of executions following one simple trading strategy. And I explain that trading strategy to you in grave detail. So you have the engine that reads your chart for you and you have the strategy to apply it to, right? And again, that's all I'm going to give you. So if you're someone that's sitting there and thinking that all makes sense to me, I don't want to go and do it, or I don't know how to do it, that's your option. I can do it for you and you can use what I've already built and already used for myself. I'll leave a link in the description. So now we're going to move on. The only way a strategy works is if you've actually validated the trading plan, if you've actually got the rules for that trading plan. But how do you handle it psychologically? Because you're going to lose. You're going to lose trades. You're going to finish days in the red. You're going to finish weeks in the red. You might even finish a couple of months in a few years in the red. So if you was a new person who had picked up a strategy, let's say we had 12 months of a year, right? 1, 2, 3, 4.
And let's say this was profitable, 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 unprofitable, profitable, 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 unprofitable, profitable, profitable, break even, profitable.
If you were someone who just got this strategy now, you never actually back tested it, you just took it straight to the live market.
And this is January, February, March, April. And so let's say you start trading this strategy in April and you trade it to perfection.
You don't make any error, which is
very unlikely. You know exactly what you're doing, which is very unlikely. You know all the rules,
which is very unlikely. But let's say you do. Let's say you take my strategy that I have actually outlined for you, give you all the data for. But let's say you decide to start trading this in April. And at the end of April, you're in a -2% drawdown. If you don't understand what I'm about to tell you right now, you will run a mile and go and find another trading strategy.
You will, because you will define, this trading strategy didn't work. I traded it all month and I lost money. But that, my friends, is the concept of random distribution. You see, we can take 100 trades over this year, but we have no idea
how they're going to play out.
Because what we might end up getting, a 15% gain in January, a 12% gain in February,
a 7% gain in March, a 2% drawdown in April,
a 4% in May, a 12% in June, a 14% in July, a -3% in August, and then 7%, 8%, 0%,
and 19%.
Because the trades are randomly distributed. You can take 100 trades, and no matter how many times you simulate it, you'll never be able to predict accurately in what order will you win and lose the trades. In fact, I can almost guarantee you, if you take 100 trades with a 40% win rate, at some point, you're going to go for a period where you just don't stop losing and it feels like you're never going to get out.
Because I have been there.
Many of my profitable students have been there. We've been there together.
I live trade with a lot of my members. We've been there together in those periods where you lose, 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 lose. But guess what?
At some point, the distribution skews.
You just can't stop winning.
And when you win big, and you're just on fire. Not because you're on fire,
not because you're amazing or you're a great trader.
Just because your strategy, your model, is distributing its results randomly. Because that's how averages are created.
I have a game for you to play at home right now. If you have a coin that has a heads and a tails, go and grab it, right? Or do it after this video. I want you to flip that coin 10 times. And what I want you to do is I want you to do that exercise 10 times. So you'll end up flipping 100 times. Now, every time you flip a coin,
take a piece of paper and write down, was it heads or was it tails? Was it heads or was it tails?
And what you'll find after around 100 times,
you will be somewhere between probably maybe 55 heads and 45 tails.
Or maybe you get extremely accurate and you get 50 of 50. Because the probability of flipping a heads is 50, the probability of flipping a tails is 50. There's two sides. It's equally probable to land on each one each time. But what you'll notice is when you're flipping it, you might go heads, 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 heads. You've flipped it 5 times and hit heads 5 times.
It's randomly distributed. Because then what you might get is tails, 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 and tails. And so after 10 times, you got 5 on this and 5 on this. But at one point,
you just didn't know what was going on. How am I getting heads over and over and over again?
You might even flip 10 times and get 8 heads in 10 times and 2 tails. And you're like, wait, what?
That doesn't make any sense. But then you might flip again another 10 times and get 8 tails and 2 heads. That is what we call randomized distribution. And so why is that important? It's a very important concept to understand and to know. Because if you just
Take a trading strategy from YouTube and you go and apply it straight away into the market, you will not understand this. And when you
go through a losing period, which you inevitably
will,
you will blame
the strategy, or maybe you will even blame yourself. But the point is you won't stick through it. You'll go and try and do something else, and you'll pay for it, because every time you start a new strategy, you reset back to zero. And if you're 2 years into your journey now, if you're a year into your journey now, if you're 3 years in and you're still doing this cycle, the reason you are where you are
isn't because you're a bad trader. Isn't because you don't really know what you're doing. Yes, of
Of course, you don't know some things, but it's because you keep resetting your clock. You try something, you don't
know how to stick through it and get through it. So you restart, and you restart 10 times. And that is ultimately why you don't break through.
because you start from zero again every single time.
So how does this affect you psychologically? I've kind of already explained it.
But like I said, if you don't know what I've just told you, and if you don't have your data to say that, yeah, you know what, I can lose a month, but I'm still gonna make
Money in the long run.
I can lose 5 trades in a row, but I'm still gonna make a lot of money in the long run.
It's that you won't be able to stomach those losing periods. If you
Don't know they exist, and they don't know that how they play out in your model, and you don't understand probabilities,
when you go on a difficult run, you'll abandon it because it's uncomfortable. It feels like it
doesn't make any sense. This is supposed to be an 80% win rate
strategy, but I've just lost 5 trades in a row. Don't make sense. It doesn't work. I'm the problem. The strategy is the problem. Let's try something else. I'm telling you, if you do this, you will never, ever, ever achieve your goals.
And that is why no strategy works for you. Because the reality is any strategy can work, but it doesn't mean that it will work. You have to do everything that I've just told you. And again, if it makes sense, if you've been through this and now it makes sense and you feel like you get it, and you don't want to go and do all the work of testing it all yourself, or you're worried that you'll get confused in the process, I'll leave a link below, check it out. If it makes sense for you, go for it.